So this morning's news flow is a lot about balancing the volatility coming out of the Middle East, still thinking about trade negotiations out of the United States, and also a little bit of asset allocation. You look at these public markets, they're not moving a ton today, which I think is a great moment to take advantage of and evaluate the private markets. We have the perfect guest to do that. Anuj Ranjan, CEO of Brookfield's private equity group, joins us right around studio. Thank you so much for joining us this morning. We're talking a lot about the volatility. We're trying to kind of piece together what security risks in the Middle East mean, what trade negotiations mean. And in that front, we've seen kind of a freeze in capital markets, or at least a pause there. We've seen a little bit of a pause in public markets as well. Is that showing up in the private markets?
Well, I think, first of all, thank you for having me back. And I think the word you used was perfect, moment. Moments like this are those that separate investors from observers. This is the time, we believe, to not be on the sidelines. This is the time to actually deploy capital. History and experience has often showed us that if you invest in times like the one that we're in right now, the next decade of returns are often reflected. And so for us in particular, and I'd say for the market in general, what we're seeing is real opportunities coming out of some of this uncertainty. Opportunities where? What side of the Atlantic? We're seeing it across the world. The nice thing about us is that we're quite global. We have a big presence in the United States, where we've been from our foundation and our entire history. The U.S. remains one of the most attractive markets to invest in the world, we think. It's a real industrial powerhouse, and there's real opportunities. But here in Europe, we're seeing some exciting new opportunities emerge as well. We're investing across, I'd say, traditional industrial businesses that form the backbone of the economy, those that provide essential products and services that are less cyclical in times of volatility, can kind of make it through any cycle and generate a ton of cash flow.
If I put money into a fund now, in 7 years' time, am I going to get that money back? It's the key question that everybody keeps asking about private equity. It's just exits. Where are the exits? How do I manage the flow within the industry? Yeah, we can take more money in, but does the money come back out again?
It's a great question. And I'd say when you think about private capital, private equity more broadly, it's hard to paint it all with one brush. As an example, we've returned $10 billion over the last 18 months. Exits are there. A good chunk of the private equity market was in businesses that were predicated on growth, low interest rates, and higher exit multiples in order to make their returns. Those are the businesses where I'd say owners are probably sitting on the sidelines and not exiting because they're not getting the valuation that they would like. When you own essential services, when you own industrial businesses that make essential products that generate cash flow is always
Where are those exits happening? You talk about those exits. Are they within private equity, i.e. other funds buying, or are they going to trade buyers, industrial buyers who are looking maybe to roll up and scale up?
Yeah, we've seen that the strategic bid is back. Strategics, industrial corporates are buying businesses that they think are an essential part of their portfolio that generate a lot of cash, that are very financeable. That's a key point. The credit markets need to be able to finance these businesses in order for them to be transactionable. And today, businesses that generate a high degree of cash flow in a sustainable fashion, they're getting financing, and therefore they're getting bids. And so most of our exits have not been to other private equity.
Right.
They've not been to the public markets. It's primarily been to strategics.
Right. Yep.
But Anuj, how do you value businesses right now? How do you even begin to value businesses right now when you've got so much flux, when it's the geopolitics, as Chris was talking about, or in the rate environment, as we're looking at the Fed later on? We just have no idea what's happening with inflation. So how can you put a price on anything? Yeah,
if you think of it purely as a cost of capital, it is hard to pin down a specific maybe cost of capital to look at the future cash flows with. I'd say the way we think about it is we want to own businesses where we are the best owner, where we can operate them better than anyone else could, and where we will generate our returns is through margin expansion, not multiple expansion. So the phrase I like to use is we're going from roll the dice private equity to roll up your sleeves private equity. And all private capital investors need to actually invest in areas where they have an expertise far better than anyone else.
So you talked about essential services. I know that you've got some personal expertise in AI from your former life. How does that fit into how you invest in essential services?
Yeah, my personal experience in AI is 25 years ago, so it's quite dated. But I would say that I was probably 25 years too early in that industry. Today, what's amazing is we are definitely accelerating into the fourth industrial revolution. But unlike the steam engine, it's happening a lot faster. And the key word of fourth industrial revolution is industrial. These industrial businesses need to see significant productivity gains in order for all of this technology investment to be worth anything. And what we're seeing for the first time, I'd say a year ago, it felt like there was a lot of talk, but the technology had not yet caught up. Today, we're seeing real use cases in our businesses, in our factories, whether it's automation, whether it's advanced robotics, or just general applicable artificial intelligence. In my opinion, using AI as a productivity tool, as another tool in our toolkit to reshape the companies we buy and remake the companies we buy and enhance margins, that's the best application of it.
Let's lean into the conversation about industrials specifically and this Europe's moment to shine, if you will. How much of that bull case in the value proposition of Europe right now is really hinged on fiscal spend? And I ask this in the context of Germany's massive fiscal impulse. You're seeing it matched in other places, but not to the same extent. What gets in the way of that?
The capital spending programs and some of the CapEx that's going into the market will really boost activity across the whole continent. We think it's a key component of investment. And what the thing is that to make these capital commitments that the governments need to, private capital can actually be a great partner. We've seen opportunities that we've done in Sweden and in France on more digital infrastructure, where private capital partners can actually form partnerships with the government to invest in their local markets and help them grow their economies. I think we're moving away from traditional just leveraged buyouts as a form of private capital. It's actually now about government partnerships. It's about partnerships with exceptional institutions.
Well, Anuj, let me just for time very quickly. When you see a potential press on those fiscal impulses, let's say a recession hits, let's say some of those spending priorities change, would that change the thinking from a PE firm like yourself?
It doesn't change the thinking because we like to think in multiple decades, not a very short period of time. And thankfully, geopolitics keep changing, but our view of businesses usually don't. We want to find great businesses to generate a lot of cash flow that we can buy and improve. That's number one. There might be some change in the nuances of markets we look at, expanding into markets that micro markets that we want to spend capital in. But overall, our view is we're here for the long term. We've always invested for the long term. If you buy great businesses that are market leaders, they can usually make it through any cycle.
All right. Anuj, pleasure to have you on the program. Thank you so much for joining us. Anuj Ranjan, CEO of Brookfield's private equity group, walking us through some of his thinking, how he's approaching the value side of his business, but of course, how he's approaching Europe versus the United States as well.